Hey, buddy.
Hey, how we doing?
Good, good, good. Let me get all set up. And all right. So, can somebody in the chat give me a confirmation that you can hear me?
Okay, anything? I can check.
All right. Sounds good. All right. So, let's get this party started. All right. So, starting on the daily chart. We're above NFP Friday. We're above previous month 50%. Statistically speaking, we're in the month higher, and this month will show its hand. If we can stay above this previous month Friday for the month of September and the NFP Friday that will come out on Friday. Going to the weekly chart. So right now we're looking for low of the day scenarios. And now is a good time to bring this up. When I say low of the day, right, I mean low of the day. I don't mean that after low of the day is met, that we'll establish a new high. Now yesterday was definitely went against the 1030 on statistics, which is fine. We know what week we're in, right? And the week that we're in, right? Remember, we do our weekly measurements off this constant variable right here, and we said we went through yesterday and we measured every single week, every single month around week 3 and week 4, and we identified how to identify monthly pullbacks versus quarterly pullbacks versus a complete trend shift. And we talked about how even the news, once we get overextended between 2.5 and 5% in week 3 and week 4, like we need to slow down and let things catch up, right? Right. So now you guys are seeing it live this month, just like you saw it live this month and this month and this month and this month and this month when we were going through that, right? And sure as crap, what happened yesterday on the news? And I'll wear my tinfoil hat loud and proud, right? What happened yesterday in the world? Iran strikes Israel. And then, like, if you listen to Bloomberg, like I tell you guys to do around when we get to week 3 and week 4, listen to the sentiment of these news drivers, right? Because they kind of, I really want you guys to do this exercise one day. I want you to listen to Bloomberg or CNBC all month. It doesn't matter. Just pick a time in the day and just listen to it that every day during that time. And you're going to see that when we are trending, the sentiment is okay, is good. But every single month when we have these pullbacks that can be proven statistically and repeatable around week 3 and week 4, right? Like shit just goes wild and it's always the same time. So with that being said, we extended the 3.72 last week. It's a new week 1, right? We're catching up. We're letting things slow down and fix itself. And now we're trying to pay attention. Is this going to be just a monthly pullback where NFP Friday does one of these numbers, right? We just have a monthly slowdown and then we go a monthly slowdown, NFP pushes it up, a monthly slowdown and NFP pushes it up, a monthly slowdown in week 3 and 4 and then NFP pushes it up. Or we're going to have a quarterly pullback where we get below NFP Friday, previous month 50%, and we target the quarterly lows, right? So this week, we're going to pay attention to the price and the relationship of previous month 50% which is right here. And we're going to see how NFP does it want to push us away from this previous month 50%. If it does not, and we get below this, and we get below NFP Friday, well, what do we target? Quarterly lows, which are right here. This is August 5th low. So hopefully that makes sense. But it's pretty, hopefully you guys are beginning to see and hear, specifically here. Like I know ICT will get the sentiment, he spoke about this before where he's like, I'll listen to the sentiment of the news. I'll listen to the sentiment of random traders. And like it will kind of clarify what he's seeing on the charts in a way where he's contrarian to them. All right, so this is the 1800 to 1900 from Sunday. This is a new week opening range, gap, whatever the ICT traders call it, right here. And they use this as a fixed variable to see, is this the high of the week or is this the low of the week, right? DR, now it's a new Tuesday, and we now have a new Tuesday range for the DR traders, 930 to 1030. So now we're paying attention. We're below the Sunday, 18 to 1900, and we're right at the bottom range, which this is a very extremely large Tuesday price. This is like an anomaly Tuesday price, right? If you look historically, Tuesday's 930 to 1030. This was just this 930 to 1030 went 245% over average. So 145% over average. All right. So now we're going to pay attention to this low right here, right? Is this the low of the week and we start edging our way back up and NFP Friday pushes us higher? Or do we find rejection around the midpoint like we did here? Do we dig into this and find rejection up in here somewhere, right? But at the end of the day, our system says we're above previous month 50% NFP Friday. We look for the low of the day between 5 and 11. We are anticipating a slowdown, but how far? We already made it to the constant variable yesterday. The low of the week, which was yesterday's low, touched that constant variable. Is that going to be enough? And do we start pushing up? I don't expect us to have a week like this or like this in terms of range because of the nature of where we are and what kind of week this is. If it is going to happen, it will happen on Thursday and Friday with the economic news catalyst. So moving on to our statistics. All right. So first thing we do is we generate market clues. And so far we haven't taken out the low of the previous days, and we have not even tested the previous day's midpoint. So there are no clues. We're just stuck inside of this range, right? So now let's put our time-based probabilities on. And those are going to be Globex Open, midnight,
settlement,
and then settlement. All right, this is midnight right here. This is Globex Open right here. And this is settlement. And they're going to be tightly together because we have not moved. So now we're going to put our RTH gaps on here. So we're going to plant that on the settlement, a fib, and we're going to draw it down to where price is. We're going to stay on yesterday. So when we switch over to the RTH, it stays on our screen. So come down here, click regular trading hours, right? And we can see we have it right here. All right, so now we're going to go into the midnight snap indicator. We're going to leave it at 25%. Nothing else needs to be changed other than just make sure this is on New York time. And we need to be on the 15-minute for this, so it pulls enough data, right? We can see that Wednesdays has a 72% probability of touching the 25% of the range of filling it. So if price is right here, right now, at the bottom line, this would be 25. We know that this should be 72%. And let's make that font a little bit smaller. And this won't be anchored, these fibs won't be anchored until exactly 9:30. I just do this so at the 9:30 I'm not rushing to failure to do it. You can just drag it where it needs to be. Now we're going to do 50%, so this is going to be the 50% of the RTH gap. And we can see that on a Wednesday, to hit 50%, it has a 65% probability. Now we're going to change it to 75% and let it update. And we can see it has a 57% probability to hit the 75% tall of the opening range. Okay, now we're going to move back to electronic trading hours. So come down here, click the RTH, switch it back to electronic trading hours. And now we're going to put our structure-based probabilities on. And our structure-based probabilities will be the 1800 high, the 1800 to 06 high and low. So this is the highest high on a 15-minute chart is at 2200, and the lowest low is at 145. So we're going to put these probabilities on. And guess what? It should be somewhere between 80% and 90%. For you as a viewer, until we get the right data set out there, you just have to put it down as a structure and understand that it has a high 80 plus probability of returning to that. So this is 1999. It says 85. And that's out of 2000 days. All right. This says $19,880, and we said that this happened at 145, and 145 has an 86% probability. Okay, so now what we're going to do, we've got our time-based probabilities on, our structure-based probabilities on, our RTH probabilities on, and now what we're going to do is take what Asia has done, what London has done, and put rejection-based probabilities on. So we're going to go to this one setup for life indicator, and we're going to factor in that Asia was from 1930 to 2030, we went long, but then we completely gave it all up. And that London hasn't shown its true colors yet. So use whatever databases you might have, whether it be DR, your own data, or you can use even the vet to put these probabilities in, but you got to realize the vet's not coded yet for you to put that Asia went long during this time period. So you just anchor it to whatever time frame that you want, and then put the probabilities of the standard deviations on it.
Careful.
All right, so we know that we went long and then broke that long at 115 from the 1930 to 2030. So we're going to say Asia was a long and it was a false, indicating that this low held. Right? So we went from 4,280 days to 440 days. So now we can say that this midline in Asia broke at 2 to 3 and after. So we're going to put that in because that's what has happened. Those are the variables that has happened. So we're going to put true and true. Nope. And we're going to put true at 1 a.m. Gotta find it. Three true and 2. Cool. So now we have 340 days, right? So now leaving everything as is because London hasn't shown me enough. I'm going to put my projection-based probabilities in based off of what London and Asia has done. So I'm going to turn on the VET. Right, we can see that the average weekly range, the average 8-week range, this asset has moved on average 936 handles. Right, and it's currently fulfilled 50% of that. The average 10-day range is 312, and we have covered 37% of that so far. Right, so now we're going to go to the VET. We're going to anchor this to Tuesdays, 1930 to 2030. Right, and we're going to start. We haven't even hit one standard deviation to the up or the down. So now what we're going to do is we're going to change this out. 19851, and this has a 94% probability of being hit as we speak. Right, once London shows its true hands, this will increase or decrease, and we're going to write that scenario out. And this is 19772, and this has a 76%. Now we're going to do the upper targets. You can see this red line right here. This says that this is typically where the weekly low is put in. So we could see a weekly low today. Okay, this is 2014. This is it. 89% probability. And $20097 has a 66% probability. $20233 has a 41% probability. And previous day's highs has a 26% probability. Okay, so let's talk through this. So now London showed us a little bit of his hand. It said from the 3 to 4 o'clock range, we're going to break out to the downside. So now that's something that we can incorporate. Bitch. I just put all those probabilities in and I had the wrong thing selected.
Do you want a hand, Mickey? I can.
No, I'm good. I'm just going to fix it. I know what you're working on is more important than what I'm doing. All right, so we're going to say that London was a short, and we're going to leave that open because we don't know. Yeah, so the probabilities didn't shift all that much. And we don't know, right? Let's write out our scenarios. Well, first, let's put a London OU line on right here. Because if we're above this, these probabilities to the upside increase and the ones to the downside decrease, right? Scroll out our scenarios. Scenario 1. Is that we cannot break above London's high by 8:30. And then 9:30 to 10:30 is above London low, engulfs London below London's high. And so each one of these have a probability. All right, so being below London's high, which is this high right here from 3 to 4, whatever the highest high is what we're talking about. All right, so that has 31, 41, 41, 50% probability. So this has a 50% probability of staying below London's high between 9:30 and 10:30 if we cannot break above London's high, this high right here, by 8:30. All right. Engulfed has a 23. So let's draw a little box here so I can walk you through what I'm talking about. So the 50% probability would be like something like this. The 9:30 to 10:30 would look like this, right? Engulf. What the hell happened? Oh. Engulfs London from 9:30 to 10:30, which would look like this, right? It has a 23% probability. And above London's 12, 7, and 7, so 26. All right, so above being this low holds between 9:30 to 10:30 has a 26% probability. So now we're going to write scenario 2 of what we can expect. That before that we breach London's high before 08:30. Oh, real quick, we need to put the highest scenario after 10:30 is a long. If we can stay above the 9:30 to 10:30 midpoint, it would be a 51% long. If we stay above 9:30 to 10:30's midpoint. So scenario 2, now we have 9:30 to 10:30 and above. You know what? Instead of typing that out, I'll just do like this. And erase the probabilities. All right. So probabilities of us being above London's low if we breached at London's high before 8:30, 30, 12, 42, 42, 8 has a 50%. It's literally going to inverse on me. And golf got a 30%. And below London, 10, 17, 21 has a 21%. And then 53% long. All right, so these are our scenarios. All right, any questions so far of the process? All right, so far, let's recap what we've done. We've put our time-based probabilities on, our structure-based probabilities on, and then based off of what Asia and London has done, we put our projection-based probabilities on. Right, we put our London midline on. We generated market clues. There are none. We haven't taken out previous day's low, and we're stuck at the 25% of yesterday's range all overnight session, right? All right, so now we're going to figure out our average daily range, which is 312 handles over the last 10 days. Which is 1.48%. We jump to the 5-minute chart, so we only have this quarter's worth of distro data. All right. Now we can see right here in this chart on the VET is Wednesday. And on a Wednesday from 4 o'clock to 8 o'clock, on average, we move 0.39%, which is 82 handles. All right. On a Wednesday, on average, over this quarter, we move 1.1%. From 8 to 12. And we can see that from 12 to 16 on a Wednesday, we move 1.03%. All right, so now let's look at these. We know that this is 4 to 8. We know that this is 8 to 12. And we know that this is 12 to 1600. And before I want you to remember this, because what we do at the end of this, I'm hoping to give you guys a light bulb moment. Notice that the average 10-day range high to low is 1.48%. And we already overlapped that with one of our 4-hour periods. And that's nothing new. It's something that happens almost every single day. All right, so now we're going to place these in the high probability areas that they go. All right, so we're going to start with the 4 to 8 because we're currently on that. So this is the highest high from 4 to current, and we can see that we're about to approach structure stat 2, which has an 86%, and this first standard deviation, which has a 94% probability of being hit, and we have already maximized our distribution average for the quarter for this time period. What is our scenario map? Our scenarios, which I've somehow lost. I was about to say I deleted it. So now we've got to think, what is London currently doing? Which scenario does it line up with the closest? And it lines up with the closest of scenario 1, that we cannot break above London high by 8:30. Does that mean we won't do it? No. It just means right now we have not breached this London high, but we've breached the London low. And so we're going to anchor off of this, because that's what currently the clues that the market is telling us. So below London's highs has a 50% probability, right? However, we have settlement, midnight, Globex open, and structure stat 1 all above this London high. So we're going to anchor this 12 o'clock, 8 to 12, right there at this 89% probability for 8 to 12. Right, just like that. And so for 12 to 1600, we know that is either we're going to do this, or we're going to take out this part of the day and then work our way up for the open. And that we're probably, more than likely, from a statistical standpoint, we're going to be in this area between 8:30 and 9:30, like somewhere around here, somewhere in relationship to this London and these settlement, midnight, and Globex open. We know that midnight over time has the highest probability of being returned to between 8 o'clock in the morning and 9 o'clock in the morning. We know that this settlement, based off of statistics, has a higher probability of being returned to between 9:30 and 10:30, right? Maybe it has something to do with the actual name of what the settlement is and what it represents, right? So now we have our average daily range right here, and right now I have it anchored off of previous day midpoint, right, and below, right? So we can expect something, some kind of day like this, unless we fail to take out this low and we get back above this London OU line, then all of the probabilities will completely do a 180, and your day will look like something like this, right? And we'll start stretching to get above yesterday's high. I'm not saying that we're going to get above yesterday's high, because that's a long ways up and we had a pretty overextended day yesterday. But we're going to we'll come down here, we'll make the low of the day between 5 and 11 o'clock, which statistically is supported. And then we'll start reaching for yesterday's areas right up in here, right? So one thing I do want to talk to you guys about is, we can see on average of the 10-day range, the 8 to 12 and the 12 to 16 have a pretty close percentile in relationship to how much it ranges. Well, that's not uncommon. That's not like an anomaly. As a matter of fact, one thing I'm doing with the pack trade members is I'm showing them this exercise right here, right? So feel free to screenshot this and do the same thing, right? Right? So the purpose of this back test is to determine how many RTH regular trading hours from 9:30 to 1600 Eastern Time have a DNP, a directional with no pullback, aka trend day, versus a DWP, directional with pullback, versus a range trade day. Now, using the hourly boxes, which are these boxes, right? The 9:30, which is this green line, this green thing if I went to the 1 minute chart, this green box right here would represent a 9:30 on the 1 minute candle, right? And we're using it as a constant variable, the mean. And from 930 to 1600, which this blue box represents 930 to 1600, 1630, I mean, use the below definitions to categorize the type of day each RTH displays as. What defines a range? A range in this exercise is defined by pushing away from the 930, the constant variable, and returning to it after 12 a.m., or we test 4 hours or more, 4 or more of the 8 hours in the RTH, we come back and touch this 930. That's how we're defining a range. The directional with pullback, right, happens when the market moves away from the 930 price, right, and doesn't come back to it. However, there are hours that go towards the direction 930. And what do I mean by that? That means previous, like in this case, the 930 is above where price pushed, but we start taking out previous hour highs in relationship to that 930. So this yesterday would be considered a DWP, a directional day with deep pullbacks, right? And then what represents the directional no pullback happens when the market moves away from the 930, but does not have any hours take out the hourly highs, lows in the direction of the 930, or 6 hours cannot take out the low of the high towards that. So it does a 6-hour trend where we can't take out the previous hour highs or lows, whichever one's in relationship to this, right? And so far, you can see that ranges, RG, this year has been happening 97% of the days out of, this wasn't the whole year, this went back to March and I'm still testing it with them, right? So this 97%, 97 days were range, 26 of the days were directional with no pullback, and 39 was a directional with deep pullbacks or reversals, right? So this is a DWP, directional with pullback. If you want to screenshot that, I'll give you a second. And remember, these highs being taken out on the hourly charts are what defines this, because it's going back to the 930. That's what I'm using. So now, hopefully you guys have the screenshot. This is an example. And this green little line is the 930 opening price. And if we rewind, my 930 time cluster comes up. Right, you can see 1, 2, 3, 4, 5, 6 of the hours return to that 930 price, right? And then we had a complete reversal between 12 and 1300, right? So this would be considered a range day. All right. What would this day be considered, audience? Hey, Jay Secco, thank you so much, man. It's always so positive. I know you show up later in these, but hopefully you're going back and rewatching them so you can understand my workflow process. Okay, so what kind of day would this be? Would this be a range day, a directional with pullback, or a directional with no pullback? And why? Based off on how we defined it. This would be considered a directional with pullback because we pushed away from the 930, but then we started taking out previous hour highs in relationship to the 930. So this would be considered a DWP. All right, this would be considered a DWP. This would be considered a range. All right, let's look at this one. All right, this is our 930 opening price, right? We spent 1, 2, 3, 4 hours in it. So there's two ways to define a range. Spend 4 or more of the RTH, 4 or more hours of the RTH in that 930 price. It can touch it or you can stay in it like you see right here. Or between 12 and 1300, we reverse and start heading the rest of the afternoon up. Oh man, Chase, that's the life hack of a dad right there. Waking up before everybody else. You will get more done in your family in peace when you wake up before they wake up. All right, so this is a range, right? We spent all of RTH at that 930 price. This is a range. Reversal happened at 1130. We pushed away from the 930 price to return to it. And we spent 1, 2, 3, 4 hours in it. Okay, so I encourage you all to do that one. I am going to jump. Hopefully you guys got something out of this. If you did, right, please like, subscribe, retweet, and let people know about me, because I'm just an Army dude, and like hopefully by now you understand that my intent is to help you and not to hurt you and not to be a wolf and not to be a scam artist like 90% of the people out there, and that you would recommend me to your closest friends and family to watch if they're into this style trading. All right, with that being said, I'm going to jump.